Reports from the National Bureau of Statistics shows that Nigeria's inflation rate has increased to 11.28% in September from the August figure of 11.23%. This is the second rise in 2 months after 18 months of consecutive decline. According to the NBS, the rate is 0.05% higher than the previous data. On a month-on-month basis, the headline index increased by 0.84% in September, down by 0.21% from 1.05% recorded in August. The composite food index rose by 13.31% in September compared to 13.16% in August. Well, I have in the studio Head Research, FSDH Merchant Bank, Ayo Akinwumi, to look critically at these figures and put them into perspective. Thank you very much for joining us this afternoon.
Thank you for having me.
First, what was your projection for September? Let me start that way. We have 11.23%. 11.28%, I beg your pardon. What was your projection from FSDH?
Okay, FSDH Research projected 11.37 for the month of September, so a little bit higher than what the actual number that came up. But the margin of error, if you look at the sample size that we use for computation, is not as much as what the sample size that the NBS released. So you can give it to, you can give us that a little bit of margin of error.
Okay, but now this is the second month after beautifully we've been talking about the decline and all of that. What are the fundamentals? Let's look at some of them before we now go into food inflation and some other issues. What do you think is responsible for this figures for this 11.28 that we have for September?
Okay, the little uptick that we had in September was still on account of the was basically driven by the food prices that based on the number that the Central Bank, the National Bureau of Statistics released yesterday. We had expected that that number will grow a little bit higher than that because of the insecurity issues clashes between herdsmen and then the farmers in the country, which has actually affected harvests. Usually this year, going by historical trend, this should be harvest season where prices should be going down because of improved supply, but that has been affected because of the two things. Number one, the crisis that we've got in all those food produce states in the country, and then lately the flooding issues in those places, so making prices of food to actually go up.
This is really worrisome because Nigerians want to hear. That's why we're having 13.31%. That's from 13.16% the previous month. So for a layman on the street, he would like to understand how this puts food on my table. How does it really affect? Let's talk about the food price now, because it's rising. Tuber, yam, cereals. I was looking at some of the figures, potatoes, and all of that. How long are we going to stay with this increase?
Well, I think I must say at this point that a certain level of inflation is good for the economy. If prices are dropping, it doesn't encourage production, doesn't encourage manufacturing sector, manufacturers to produce things. So you don't want to produce with the expectation that when you are ready to sell, the prices will not come down. That can sustain losses, which of course is not good. When companies begin to sustain losses like that, what you do is that you tend to reduce your workforce, you tend to not to employ factors of production, land, labor, capital, which is not also good for the economy. But a marginal increase is good, but what is important is the fact that rising inflation leads to erosion of purchasing power, right? Consumers' income, right? And again, it means that what the unit of money could buy previously, it can no longer buy it now. And therefore, if your profit for a business or your income as an individual is not growing as much as the rate at which the general prices, which we call inflation, is growing in the market, it means that you are not able to buy what you were able to buy before, which is not good. It also calls for monetary policy, response in terms of the central bank may feel, oh, this is because the major objective they have is to ensure price stability. Price stability in terms of general prices, which we call the inflation rate, and then price stability in terms of exchange rate. And they have a particular tool with which they address this, so the interest rate. So if inflation rate is rising, then the central bank may have the tendency to say, let us tighten. Tightening means that they withdraw a little bit more money from the system. They allow interest rate to go up. When interest rate is going up, small businesses may not be able to borrow very cheap, and they may not be able to fund projects that will have been bankable. And so all these will lead to, disequilibrium in the economy. So, but for us, it's going to be likely remain at the current level in the next few months until it picks up a little bit towards December because of the higher velocity circulation of money. Yeah.
Money across the system. Before I go to my next question, I just picked something from what you're talking about. Talking about purchasing power of Nigerians. It's going to be affected when inflation is on the rise. Now, this is a time where people are talking about minimum wage, talking about increase in minimum wage, and we've not done that in a long time, and this government is considering. What effect do you think that will have on these figures one way or the other if it is done at this time?
Okay, so there are expectations that drives prices. So the fact that they are discussing minimum wage, the fact that government is saying, oh, we're going to do 24,000 minimum wage, we're going to do, labor is saying 30,000, anything below 30,000, which we agreed, we're not going to sign. We are saying we're going to do 20,000 for private sector operators. These are expectations that can drive up prices. However, in Nigerian context, because you remember that we have extremely high, weak purchasing power in Nigeria now. If you speak to large corporates, large companies, manufacturing companies, you see, look at their books, talk to them, you will complain about built up of inventories, things that they have produced, final products that they are not able to sell. A number of them are even giving credits, supplier credits to people, to their distributors, to customers, to encourage them to buy. So an increase in the minimum wage may add little points to the inflation rate, because the market women will say, oh, even though I'm not working in, even though somebody is not affected by it, oh, they just increased your salary and you should be able to buy more. But some companies will say, wait a minute, of what benefit is it? There is cost involved in keeping goods that I've produced that I have kept in my warehouse. Let me sell them, because a number of them are giving discounts to encourage people to sell because of the weak purchasing power in the country. So really, if we put all these factors together, the impact of the minimum wage on inflation may be minimal, right? With what is going on. The major drivers of inflation rate in Nigeria is actually the devaluation of the currency. Between now and election, we do not think there will be a devaluation. Number two, adjustment of energy prices in terms of electricity prices, adjustment in PMS prices. Those are, or if there is any food shortage on account of flooding. We got this in 2012, and we saw what happened. 2012, January, there was an adjustment of PMS price and inflation rate spiked. Then around July, August, we had, food flood problem in the country and inflation. So those are major drivers of inflation. Yes, if they approve the minimum wage, begin to pay it. If they don't pay it, once they announce it and they approve it, the effect may be felt in the market, but then it's just going to add little basis point to it, which is not enough to shift it beyond 12%.
Okay, thanks for addressing that very important one. Now, core inflation reflects the actual inflation figures for the economy, and what I have is dropped marginally to 9.8% from 10%. That's close to single digits. Yeah. Though you might say, what do you think? What's your take on that?
Well, the headline is staying double digits. Central Bank is targeting headline inflation of between 6 and 9%, but we may not likely say that. And that also has policy implication. The fact that if we are able to address the food crisis, inflation may likely drop. You remember in this same studio earlier in this year, where FX Research we projected that inflation will likely be in the region of single digits, okay, around this time. But the unexpected, crisis that affected farmland planting season and harvest is what we are having the impact on the inflation that we have at the moment. So if we are able to address the food problems, inflation may likely drop a little bit. But otherwise, it may remain at that level, because that core inflation number is an important indicator of where inflation should be headed to.
But as we move towards the end of the year, and we keep talking about this, even at the stock exchange and everywhere, everybody keeps talking about the political season. We are moving to an election year. Now, a lot still needs to be done with regards to the Nigerian economy, with what we face, fragile growth, and even at a point, Central Bank came out to say that we could go back to recession if we don't get it right. Now, what would be the quick wins? What do we need to do to at least get it right? Maybe a little bit of stability as we move to an election year.
For me, unfortunately, fiscal policy takes time for it to affect the real economy. Monetary policy can affect the financial system instantly and has a way of permeating to the real sector. What I think the federal government needs to do, the Central Bank is doing all the policies to ensure that we have stability in the exchange rate, but there are constraints to the extent that in Nigeria today, exchange rate that we are talking about largely depends on where oil price is and oil production is. At least the first win is to ensure that we don't have any attack on our oil pipelines.
Exactly.
If there is an attack on that, we may likely have problem. I think it was FXTH research that first released, following the release of Q2 numbers, and we reviewed it and we released a note to say that there are things we need to do, otherwise we may likely go into another level of recession. Why? Because agriculture that accounts for about almost a quarter of the total GDP number grew marginally by barely 1% in Q2. In Q1, it grew by about 3%, and we thought, oh, this is the lowest growth rate in about 25 quarters. But in Q2, it now went down by barely 1%. Given that, on the back of that is the fact that telecommunication was the major sector that rescued the economy from contraction in second quarter of the year. And of course, we know what's going on in that sector now. Yes, we still have a lot of potential in that area. So the federal government needs to ensure security of lives and property across the country. The federal government needs to ensure that they engage the people in the Niger Delta region of the country to ensure that nothing happens to the pipelines. This federal government needs to ensure quick implementation of the ERGP. They need to ensure that the short-term, fiscal framework, which is the budget, they need to ensure that they quickly implement it. We have bad road, poor roads. They need to come up with the framework with which we are going to use to address the infrastructure problem in the country. We have been discussing it. Government cannot improve the infrastructure in the country through yearly budgetary allocation. How much money are we spending on infrastructure in the country from the yearly budget that will enable us to have, infrastructure that will sustain growth in the country? Involve private sector.
Public-private partnership
come up with framework that will be acceptable to the private sector and let them improve it. And then the issue of ease of doing business, on clarity in some policies, and we have to have a rule of law in the country that the law is above everybody, and everybody must obey the law. So contracts that you sign with people, you've got to obey or honor those obligations. So once we do that, we'll be able to attract investors who can lay, the foundation for sustainable growth in the country. And something that we are not paying enough attention to is the fact that our population is growing. Look at IMF figures by 2.78, yet our GDP is growing by 1.5. That is saying we are becoming poorer every day. Number of people economy is not growing at a level that will be enough for you to create job. All this needs to be addressed before we can say we have an economy that is inclusive.
Inclusive, that's always the word. We need inclusive growth. Now, crude oil price seems to also be on the rise, you know, with all of the issues all around across the world. That's not controlled by Nigeria. It's a global issue, so we can't really depend on that. But the negatives for Nigeria seems to be on, because the landing cost of PMS as of today is more than 200 naira. Where do we go from here? We don't refine. So the negative effects of this rise in the price of crude, is it not going to fall back on this country, one way or the other? I think
it is already falling back on the country. You remember that even in 2018 budget, there's no provision for fuel subsidy in that budget. Now, the NNPC is going to maybe the first charge take the subsidy, because if you are selling at a price lower than your landing price, somebody has to pay for it. NNPC is paying for it based on what we hear. But you know what? It is impossible, almost impossible, practically impossible, politically unwise for us to have subsidy removal between now and an election. But I suspect that the first thing the new government or the incumbent, if they win 2019 election, will have to deal with is the removal of that subsidy. And the earlier all of us start to prepare for that time, the better for us. So that we can even have, we understand about 1.5 trillion is what is going to go up. And, you know, we also get report that a lot of Nigerian cargoes are on the IC, oil cargoes, looking for buyers. In other words, we are not even taking full advantage of the rising oil price. We are also paying for the fuel subsidy. So it's like a double problem for us. So we need to deal with that. And again, this may not be a short-term measure. We need to FSH Research has been writing a report on this. How do we ensure that we expand the revenue base for Nigeria such that we don't depend on oil? The crude oil production, we don't have, control over it, even though, because we can't produce any quantity. We belong to a cartel, OPEC. The crude oil price, a whole lot of factors determine the price, which are completely outside our control. And that is the sector, that is the commodity that can account for over 85% of our foreign exchange, over 70% of our revenue. So the earlier we develop structured system to ensure that we have multiple sources of income, the better for the country.
Ayo Akinwumi, Head Research, FSDH Merchant Bank. I know you can go on and on, but I must thank you for your time on the show today, looking at all of these issues as it affects the Nigerian economy. Thank you for joining us today.
Thank you for having me.